to introduce myself, at high level, I work at PayPal as a market insights lead. I guess that's a very similar role to what many of the people in the audience are. And I can start kind of by just talking a bit more about what I do and about my team, to kind of set the context for the content for my presentation. So the team that I work in is called Market Insights and Strategy at PayPal, and we roll up into the finance org, which is really great because as a result we are a third-party objective team that brings a very analytically strong perspective to the company, and really it allows us to be executive advisors to really all the division, all the organizations within PayPal, ranging from marketing, sales, finance, strategy, analytics, and product development. In terms of what we cover, it's really our research covers anything that goes on beyond outside the four walls of PayPal. So you can say whether that's related to customers or competitors or market trends or regulations, really anything that's going on outside that falls within our purview. So it's really a really broad reach. When I think about my role specifically, so our team is really lean. It's got 12 people. We all report to the head of the team, and everybody sort of focuses on a specific segment of work. And my work focuses a lot on customer research within a competitive context. So how can we understand our customers better so that we can win in a competitive environment, so to say. So the kind of questions that I look at are market share, market growth, competitive strategy, customer personas, really sort of understanding how customers interact with and think about our products and our brand and our competitors. The way we work is probably very simple to any other insights or strategy team. We deal with questions that come from executives around a variety of topics. However, my work I've seen is increasingly been a lot of custom ad hoc questions that rarely really conform to kind of standard research constructs like a traditional market research team. And with that, I sort of want to set the stage for the rest of my presentation, which is defining a quantitative framework to approach a qualitative problem. And when I say qualitative problem, really I refer to kind of any sort of problem that it may be qualitative or it may be kind of a broad custom ad hoc problem that can't really be bucketed. How do you kind of develop a framework around that? So let me provide some more thoughts around that. So really, as insights professionals, we deal with business questions kind of coming from all directions, all shapes and sizes. They could be customer behavior, personas, give me competitive landscape, etc. And really, like when these come from executives, they're rarely like neatly packaged and defined and scoped out that we can just look at it in one glance and know exactly what we have to do. I'm sure everybody has had a similar experience. Like the best case is there's a predefined mold for a study, like this is a qual study involving a culture safari, or this is like a quant study which requires this test to be applied on this data. That's the best case scenario. But at the end of the day, like many of the questions that we would receive, and at least from what I've seen in my experience, they're really unique beasts on their own, and they need to be tamed with custom approaches. Often not easy to bucket into qual research or quant research, but really taking the elements of both and creating these hybrid solutions that are entire entities in themselves, right? Very custom, very ad hoc. Our responsibility is to sort of strip down these broad and confusing questions into their most critical elements, and to do that, the most important thing we need is, defining a problem solving framework. And really that's going to be the bulk of what I talk about today. And how this really helps us is that it enables business alignment. So we're aligned with our stakeholders and, with the entire company. There's transparency so that people know exactly, what we're doing. And there's structure to our research. So, it's much easier on the researcher. And I'll talk about these benefits, a lot more detail later. But let me start with kind of talking about the kinds of questions that we get, really the start of the funnel, so to say. If you look at the left and the right, people could get questions on either side of the spectrum. On the left, there could be a question like, can you do a quantitative concept test to tell me the magnitude of, how A, B, C factors influence X behavior within the customer, where A, B, C can be calculated as, that's like really detailed. I kind of went overboard there just to kind of prove a point. On one hand, you can get a really like detailed and specific question, but I feel from my experience at PayPal that that's very rare. On the other side, the more standard question, in my opinion, that you could get is, I want to understand the driving forces behind this X unusual customer behavior. An executive doesn't have time to think about all the factors A, B, C, and X. Really, we get a broad question. Similarly, would you rather be likely to get a question like, can you give me a quantitative understanding of how competitors A, B, and C fare in X, Y, Z aspects of customer acquisition? Or a broad question like, I want to understand my competitors' go-to-market strategy with respect to our customers. Very broad, very unstructured, and in my world at least, that's very common. So that naturally leads us to have to break down the problem. I'm sure many people do this, but I'd like to talk about it a bit. When we don't receive, a cut and dry problem, we really have to think about sort of what are the challenges this problem, poses to us, and then how do we simplify it. So at PayPal, I'll kind of use an example at PayPal to really guide the rest of my presentation. We were tasked with a project to help the marketing and sales executives understand how our competitors' go-to-market strategies are stacked up against us. It's a very broad question, and really this was very close to how it was worded to us by the head of go-to-market at PayPal. At the time, we didn't have too much context around how other competitors structure their go-to-market strategies. And while we did have some knowledge within PayPal, it was kind of sporadically spread around by different teams, either split by geographies, more regionally located research, or for specific competitors measuring some things, and then for some others measuring something else. It was sort of haphazard within PayPal. And this was a time when at PayPal we were planning to revamp our entire GTM strategy as we came under new leadership, and as we were really rethinking how our business sort of stands in the ecosystem. So this was a really critical project. I'll start with that. But for an executive, this question is very easy to ask, but to us, there were three challenges just off the bat when we heard it. One is that PayPal's competitive landscape is very complex. We have different types of competitors for different product lines and customer types. I'll talk through it in a bit more detail on a later slide to just give you a sense of the magnitude of scale of competition. But it's primarily just because PayPal plays in digital payments, but digital payments includes B2C, online checkout, includes P2P, payment transfers from person to person, B2B transfers, in-store tap and pay, in-store QR code. We have like so many different types of businesses. We work with the banks, we work with merchants, consumers, governments, really kind of across the spectrum. So really, customer go-to-market strategy, it's like such a broad question. Secondly, planning a GTM strategy to kind of just encapsulate that is it's a very dynamic and complex process and go to market. And not only is it complex, it's also varied across companies, which is quite, again, difficult to kind of assess. And then lastly, there are no established industry metrics. Oftentimes a research study, it's great if it happens to conform, say you're looking at brand metrics, the industry metrics like NPS or awareness and perception. When you're evaluating a go-to-market strategy and you don't really have a very specific set of metrics that we can track. And that's really key to where the quantitative element starts to like pop into this problem. So high level, what steps did we take after we were faced with this question? First, we did the first 3 steps. Very cookie cutter standard, but I'll walk through them anyway. So we took some time to understand the scope and stakeholders and timeline, just like any research project. So we want to understand what countries are we interested in, which stakeholders. So like, besides the GTM teams, which teams in marketing and sales and strategy might be interested in this, and really kind of what is the lens through which they're looking at it, and timeline, because as I mentioned, we were planning to revamp our GTM strategy, really enhance it. And so we wanted to make sure that this research is timely, in a sense that it's able to actually have a tangible impact on the upheaval in the strategy. Then we went and looked a little deeper at methodology. Now, these are kind of standard sets of methodological practices that we employ. Interviews with sales leads within the company, interviews with kind of expert interviews, interviews with competitors, and then interviews with customers. And we were defining, then we went ahead and like, now we know who we're really going to talk to and gather information from. And sorry, in the methodology, not mentioned on the slide, but we also do like desk research, and we also do like mystery shopping and stuff like that. Yeah, and then defining the kinds of questions we want to answer at a high level, like, just sort of the broad question for this thing was, what are the differentiating factors and sales claims that a competitor would make to a customer to kind of try and win them over? And we sort of listed a couple of key questions that we want to really elicit from this. But even having those key questions, there was still a big gap. We can't go and just answer those key questions. So with that said, we decided that the most important thing is to define a quantitative framework to underlie the problem. By quantitative framework, now I don't necessarily mean it's like a very complex quant study. I myself, I'm not an engineer. I don't have like a very technical background, but at the same time, I realize I've studied statistics, and I realize the importance that in this day and age, like, executives are so data driven that adding a quantitative element and some structure to a problem can only help your cause. So we went ahead and created a structure, which I'm just going to jump to. But before we could go and think about the structure, really the first question we have to answer is, within this complex ecosystem, we have to really break down the ecosystem, because this is a large spanning competitive question. And we need to kind of think about our landscape and which are the competitors that we need to really focus on so we can make kind of maximum broad scale impact. So what we did was, so what I'm showing you here is just, to show you the scale of what we're dealing with. We have the traditional players, kind of like the large banks and sort of the incumbents in the space who are really large. And then we have disruptive, digital payments providers, which come from, either the big tech companies or from merchants or from even like fintech startups. Then we have various types of players. We have kind of the networks. We have people who deal more on the issuing side, so more on the consumer side. Like, these are competitors that deal with you and I, and we actually kind of use their products. and they work very closely with the banks that kind of issue your credit card. And then on the other side, we have competitors who really work on the back end. They work with businesses and merchants, and then they work with the merchant acquirers, so the banks that kind of support the merchants. And these are sort of players more on the back end, and they have a totally different strategy. If you want to deal with, if you want to deal with a consumer, you have to have a totally different go-to-market strategy than if you want to deal with the business. This is the traditional B2C, B2B divergence. And then you have players that kind of are sort of sitting in the middle as well. So we first, really examined this chart and decided how do we kind of space out competitors, to create kind of an even distribution where we really feel that we can make impact, which parts of our business. And this way we selected 9 competitors that we felt were really important. And so now I'm going to jump into really the framework that we created. Now that we know that the competitors we want to look at, how do we break down this really challenging problem into a framework that we can use to map out the problem? So we innovated this really cool thing, which at least I'm very proud of. It's called the sales lifecycle framework, which actually helped to support our problem, but then actually got used a lot further also within the business besides just this specific problem we are looking at. It really buckets the sales process into kind of fragments, into like a life cycle that can be independently evaluated. And not only that, it can then be compared, like for like across competitors and also stacked up against PayPal. So if you look at the bottom of the screen, I've labeled numbers 1 to 10. This is what we consider to be the essence of, a sales lifecycle process. If we were to answer the question, how does a competitor differentiate itself and make sales claims to customers? This framework at the bottom really, we feel encompasses everything we need to know. So it starts with their sales organization, for example. Sales organization means, what is their sales headcount? How is the sales team structured? Is it like enterprise business, small business, consumer? How is it structured? Then partnerships. What kinds of channel partnerships do they use to kind of get through to their customers, and what kind of messaging do they do there? Then the onboarding and integration. So this is really very payment specific. This is the most important, that this whole framework is payment specific. So for payments, really the first thing a merchant that onboards our product has to do is to like integrate it with their systems. And so this is a very key like differentiating factor. Then we have like sign-on bonus, payment capabilities, settling funds, fraud and authentication, and kind of down the spectrum to the final stage, which is sort of conversion, growth, and impact. As a payments company, it's one of the key propositions that any payments company makes is that at the end of the day, we are going to be able to drive top line growth and customer conversion on your website to a merchant. And we wanted to record that. And we went and kind of like, got that from our sources, and then that helps to compare across competitors. And now if you see within each of the boxes, while I haven't put any data in because I want it to be very dummy representation, each of the boxes contained really our kind of qualitative personas, so to say, like qualitative profiles that we created for each of the competitors. So for example, say under sales org, the first bucket. For PayPal, we would obviously know what our sales structure is like, but we would actually provide a very distilled summary of what the sales organization was like for XYZ competitor. And then we also added, because at the end of the day, we want to be able to measure up these against each other. An executive is not going to go and read the text for every GTM strategy under each of these boxes. They may, certainly they may, but at the same time, they may not. So we wanted to add a quantitative element, and this is where the quantitative, this is why this framework is so important, because it gave us some structure to add some kind of quantitative assessment. So what we did was we created a proprietary quantitative measure for each of these stages, basically like a formula based on our research that would allow us to score each of these boxes and stack them up against each other, and really like really help leaders understand kind of where we're strong and where competitors are strong, and rank order them. Sorry, essentially rank order them by 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 strategy. Um, and like I said before, it's really important that this whole thing is very transparent and very clear. While I can't share the exact quantitative metrics that were riding behind our kind of framework, I can talk a little bit more about the elements that we thought about. So if you think about the first category, like I mentioned, sales organization, very key part of go-to-market strategy. We made sure that we make very transparent to our leaders what are the various subcategories that are kind of contributing to this final, quantitative measurement that we. So say I gave a score of like 8 for a sales organization, that is a function of sales headcount, structure by region and segment, whether or not you get an assigned dedicated account manager, post-sales service and quality. Now, for each of these, of course, we had to have a way of like gathering that info. So I don't want to go into so much detail, but the point I wanted to make is that we made it very clear as to how the quantitative measurement is happening on the back end, so that any leader is fully aware of what's going on and on what basis they are making decisions. Because say they don't like, while we provide recommendations based on the data, if a leader just by gut instinct doesn't want to follow something, we leave it open for them to dig down into the details and really understand whether or not they should be following the data, or whether this methodology doesn't lend enough kind of backing for them to actually follow through with the decision. So we were really proud about that. And kind of further down to this quantitative measurement, this kind of structure, we made sure to actually open source all the data, all the information we got from our interviews, mystery shopping, desk research. We kind of structured it all together to kind of match these boxes, so that all the raw data was also available. Which was really big for us. Yeah, so the final output, right? Just checking how much time I have left. Yeah, sorry. Yeah, hopefully I'm doing good on time. I actually can't see the time anywhere. So the final output that we were able to create was the most important thing I think that we all do is create an executive deck. We put all our insights together. We did a SWOT analysis of all the competitors to kind of just synthesize the information a bit better, create competitor profiles for each competitor that we looked at, and add like an element of quantitative drivers. So like what is kind of driving the growth in like a different competitor versus us. So that was like at the more executive high level. More at the ground level, our data was so rich that we could make an impact not only at the top but also kind of people on the ground, like people who are in sales who are actually going out and trying to impact these strategies, impact our sales top line. So we distilled our qualitative insights into sales battle cards and guides. Like this, it's a very standard industry practice, but based on our understanding of how competitors, pitch their products, we're able to create battle cards on our end that are able to, tell, like in the marketplace, if competitor X says this, then PayPal should have, these responses prepared, So we were able to feed into that process to help them understand really what can competitor X say, so that we're not kind of thrown off guard in the marketplace. And then lastly, and I think this is the coolest thing we did, was that, we have sales battle cards and we have these kind of quantitative measurements. We really plugged into the prioritization process, because there are so many parts of the GTM process and sales lifecycle process, and we were able to really add quantitative measurements to them, which really allows us to hone in on where PayPal really needs to focus. So we helped to create like a prioritization framework for which parts of the lifecycle we really needed to think about. and double down on. And the second thing is that it allows for ongoing measurement. So we did this study last year, and we're redoing the study today to understand, how each of these competitors, how they've sort of changed their strategies, and whether those numbers have gone up and down. And really, if we plug PayPal's data into the same model, how do we stack up against the rest? So it really helps with ongoing measurement of outcomes, which I believe sometimes in a pure qualitative study can be challenging, especially you're comparing very qualitative data against each other. It's never too easy. So that was a great success for the project, and overall it received amazing visibility within the company and was able to drive a lot of feedback as we were changing our GTM process and really thinking through new ways of engaging customers. Now, back to kind of this broader methodology I'm talking about, besides just the GTM part of it. Why is it so important to have this sales frame, this framework, this quantitative framework to surround a qualitative or just a generally undefined problem? It's a smarter way to narrow down a complex question. At least from an insights perspective, we're really busy at all times. I'm sure each of us are dealing between 1 to 5 projects at any time, and if we're able to create these frameworks, it's easy for us to digest the problems we are given, and then very often we can reuse them for other questions that have similar needs, and it's just a more efficient and smart way for us to deal with problems. The second thing is it's accessible to a broader audience. I somewhat alluded to this before, but when you do a qualitative study, for example, very often the consumers are like the marketing and sales teams who kind of want to get, who are not really big on the hard numbers and the analytical side of things, but I'm sorry, that's just a stereotype, but very, very broadly, I've seen that at least at PayPal. But when you add a quantitative element to it, you suddenly increase the audience to which you can deliver your content. So we were able to fold in finance and strategy, even risk to some extent, within our project, because we were able to show measurements and a more kind of quantitative grounding, which finance and strategy teams love. They love to have kind of an analytical backend to any project. So this just opened up our entire deliverable to almost the entire company. It's an easier way to back up insights with hard numbers. So even for those who are very big on qualitative insights, sometimes it's quite difficult to validate if somebody has a pushback on a specific insight. It's sometimes challenging to go into the raw data for qualitative work and really try to tie that back to prove that this insight makes sense. But instead, when you have numbers, it's a lot easier to kind of just deal with these data, and it just to create mental models around it. The fourth thing is to be able to track and report over time. Again, hopefully that's a benefit that can be added over qualitative work where you don't necessarily have that capability. So to be able to critically think and add some kind of quantitative backend that allows you to then track and report the same kind of idea over time. And then the last thing is we do this work typically, for a specific segment of our company, but sometimes it's so impactful that we want this to have visibility at the C-suite level, and not just say the CMO, but really for us, as we call it, SLT. We want to convey at least a very high level version of the work we've done and the insights we have, and at least we've noticed that it's much easier to deliver this information in a quantitative format. So going back to the GTM study, we were able to deliver a very high level executive summary of the sales processes just by kind of utilizing the numbers, the number ranking that we had, and we created kind of a much more condensed chart to stack up everyone against each other. And yeah, it was great that we were able to expose that to the C-level as well. So yeah, that's really all I had to talk about. Thank you so much.